Hello, traders. It's 8:04 a.m. Chicago time on Thursday, the 25th of October, 2018. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, seeing the market bouncing just a tiny bit across the board. The Nasdaq, which was down quite a bit yesterday. Nasdaq finished down almost 5%, is up 1% this morning, trading up 66 or 67 and a half points. Currently, the Russell follows that, up 0.65% or almost 10 points. Um, the as I said, allocation is clearly somewhat to risk, but I wouldn't say it's very, very aggressive. The Dow's only up 128 points. Yesterday, the Dow fell off quite a bit. The dollar's off this morning, trading at 96 and half a cent, down 0.18%, and the 10-year note is just slightly down. The 10-year note is off 2.5 ticks. So overall, balance-ish to risk, slightly risk on. We've started many mornings with risk on in the extended hours, and then we dump out right after the market opens. So we'll see what happens here. Just a word of warning, you may hear some blood-curdling screams in the background and noises. That's just my 7-month-old practicing her voice and playing and so on. I'm just watching her this morning before I head into the office. So just disregard. Let's take a look at what we are expecting for today in terms of potential interruptions. We got a lot of releases in the overnight session. We got the IFO business climate in Germany, GfK consumer confidence in Germany as well. But we also got the ECB announcement at 7:45 a.m. Eastern, and currently ECB's Draghi is running his press conference and speaking about the Eurozone and their policy. Looking ahead, pending home sales at 10 o'clock, expecting 0% for September. And then we have Fed Speaker Clarida and Fed Speaker Mester. Clarida's 12:15, Mester's after the close, and that's pretty much it for the session. Let's take a look at what we expected yesterday versus what we have been gifted, I guess. This is the expectation yesterday. I was looking for the probabilities were on the side. The probabilities were on the side of a break of this high, as I'd mentioned, and I was looking for that. I was really looking for it to either test down and break up and push higher, or I was expecting it to, equally likely, I was expecting it to push higher and then fail down that scenario 2. And then I was looking for the scenario 2 to push all the way down to 27.15. Both, actually, none of my scenarios played out the way I had expected yesterday. They were all incorrect, did not anticipate the sell-off that we had. Here's what we saw. We saw the market essentially opening right around this key low volume node here. I talked about it yesterday. The key low volume node separating this upper distribution from the lower distribution. It tested up to 2743.50 and then rolled over. And once it rolled over, it really looked heavy. I mean, there were several mid setups yesterday that were beautiful that I shared with the Convergent trading crowd, members of Convergent. And we ended up, the target there was to head down into 2714.50 to test the point of control, and then potentially to balance out and hold steady in that area, just like it showed for scenario 2. But we ended up pushing back up strong right through mid VWAP IB low, and then we just started to sell off, and it just looked like as we started to sell off, note how the black lines down here, these black lines right here, little black lines, those are the 20-day 20-day average volume at that bracket. So this is a 15-minute bar chart. So this would be the black would be the 20-day average for that first bracket at the opening of the day, the first 15-minute bracket. And what we see here is that as we start to move down, the volume starts to accelerate, right? To culminate into this big bar down. There was there was there was some chatter, some friends and stuff, um, other traders who are saying that they're getting they're hearing about margin calls and stuff. And so as we approach the end of the day, the book for a lot of people will have to balance out, and we see a lot of dumping at the end of the day, and we end up with this outstanding bar at the end of the day. The anticipated volume on that on the average on that closing bar is 164.7 thousand contracts. 164.7 thousand contracts. We got 330,000 on that bar on the close. Quite a bit went off there, and as you see here, quite a bit went off right near the low, and then we finished above that. And then from there, the expectation is we are likely to drift higher. I was looking for the low volume node, the key low volume node, and that's exactly where it hit yesterday. I'm not saying that to say I can predict the future and hey, look at me. It's just what it tells me is that the market, the auction, as crazy as it's been or has seemed, it is actually somewhat methodical. Note the overnight high is playing right along the prior days, the prior session's low. Why is that important, or why is that relevant? It's relevant because it tells us that those participants in the overnight session were respecting day time frame levels when the market was drifting up. Okay. A quick thing I haven't reviewed in a while that I want to just look at for a minute. So yesterday was a clear trend day down, high volume. The volume was not too crazy. I mean, we got 2.36 million contracts to contrast what we had the day before on the 62.5 point rally. We got 2.23 million. So it's not that as much as we have sold off and as much as this is getting press and all that, it really isn't all that crazy. And I'll show you what I mean here. I'm going to pull up the fundamentals chart. 1 second, it's coming up. Sipping on my tea. I'm going to pull up the fundamentals chart, which should turn up here any day now. Any day, buddy. All right, so this is the fundies chart coming up. Sorry, I closed my charting package by mistake. Logarithmic scale. So let's look at the what's happening here. Here's where we are. We are right in here. This is what we're seeing recently. We're seeing it roll over, pull back, and continue. What have we done? So we are still lingering around a key balance area on the big picture using a time-based profile. We are right back into this big area. What we're looking at here is the SPX. The SPX has no volume because it's a made-up index, and I'm just using a time-based profile to approximate volume. And where we are here is right in the middle of this big area. Where am I going to start thinking, oh crap, this is rolling over? This is rolling over. I'm going to start thinking that right down here. Once we clear the key LVN below at 2,525, then I'm going to start thinking, okay, okay, now this is pretty serious. So far, comparing what we've done in here from the top versus what we've done in here at the beginning of the year, really there isn't all that much difference other than the folks who are watching the 200 moving average. This is a 200 simple moving average right here, and we're beneath it, whereas before we were not. Now this bull run, and I'm not an analyst, I have a minor in economics, but I'm not an economist. You know, the bull run has been going on for 10 years, and it's at some point it's likely to somebody's got to pay the tab on that at some point, and this may be it. But for now, I wouldn't consider this a panic just yet. By looking at the put call ratio, when we were dropping off back in January, February, was right here, and it's basically in the same place right now. It's outside of what I would consider to be normal, going back to 2007. This area, this cyan area here, or whatever this color is, teal, I don't know my colors. This is the normal range for the put call ratio, and we're climbing above it, but it's nothing dramatic. So what is my point? My point's not to say buy, 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 buy. Bear Stearns is not going to crash tomorrow, but my point is to say that it's not a panic. It's a lot of dramatization, and the media makes money doing that. Let's take a quick gander at, nope, not this. At the overnight session. The overnight session has a clear double distribution profile. Sorry, my laptop's having a hard time keeping up here, so it takes it a while to paint. Is a double distribution profile with the mid being at the LVN. 2677 is a key area here. We have mid, VWAP, and the LVN right on top of each other. The volume overnight is almost 4 times what we would consider to be common, or the most occurring in the data set. And it's really a two-sided battle here, and we're starting to break below. So it's important, by the time we open here, it's important to recognize where we are in terms of what the overnight has done. The point of control has shifted in the last half hour, shifted from there to there, not the last half hour, in the last little bit, has shifted from there to there. And now the market is selling off and back to the LVN. If it continues lower, then I'm most likely going to be looking for a push back up for a chance to sell for a continuation trade based on how we closed yesterday. Yesterday we closed pretty weak. We closed at the lower quartile of the range, and the expectation is that is likely to continue. Let's look at today's plans. Today's plans. So let me pull up my master levels. So the second sigma, where are you? Second sigma up is 2734. The first sigma up is at 2700. Closing sigma. 2700 also holds the yesterday's mid and VWAP. Very interesting area, that 2700, including the century figure. So let's kill this. A couple of singles there yesterday as well. So here's what I'm looking for today. My primary expectation is for the market to open up. I expect some wide swings on the open. I strongly suggest that folks do not engage with the market, at least the first half hour. Wide swings, I'm looking for it to revert back, push the overnight high, and then eventually impulse down, and then start to consolidate, and then push through to test below. I expect it to move to as far down as 2637-ish for the bounce on the close. That's the primary scenario. What's going to drive this? How do we behave on the way up? How do we respond on the way up? And where's the first impulse? The first impulse tells me which side is now ready to do real business and is committing to the market. The secondary scenario is an open a drift down, just a continuous grind, sell down, and then coming into balance, push up into the low volume node, consolidate, and then hold in place. Oops, two. The tertiary, the third scenario, the third scenario is an open that pushes lower, impulses up, consolidates, and then starts walking itself up, clears the LVN, and heads back and balances out at the point of control. Notice yesterday's one thing I didn't note earlier. Yesterday's point of control, the prior day's point of control is 27.11ish, 27.14.50. Yesterday's point of control is 27.11. So the point of control, despite all the selling, has not shifted. So in price, it looks like things are terrible, but in value, they're not. There's some balance here, and that's why I'm looking for this third idea that we would push back up and come into balance and then hold steady. Okay, the powers on the sell side. Clearly, we have lower highs, lower lows on a day time frame. We're one time framing down. Pay attention to the prior day's high. Okay, the prior day's high is key because it ends at one time framing and it's likely to create a blast off effect like we saw last week. I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.